Good afternoon, everyone, and welcome to the VectorVest 7 Navigational Series. My name is Glenn Tompkins. It's my pleasure to be with you, taking you through this series. I will be your host for the next hour. And in this session, this will be session number 10, where we're going to be looking at the last part of Unisearch. Unisearch is big enough that I had to break it down into 3 sessions. The whole idea of the navigational series, if you're brand new, this is every week, Training Tuesdays at 2 with Tompkins, also known as TTTT. This is where I take you through each and every tab of the VectorVest software. And if you're new to the software, I think that it's a great foundation to know how all of the tabs in the software work. Are you going to use them all? You may not have to use them all, but at least understanding what they are and how they can fit into your personal trading plan, I think is an awesome thing. And if you're brand new, folks, this is what you need to get acclimated to the software. Yes, it does take 16 weeks. All right. But if you're a subscriber and you're going along and you like what you see, these navigational series are going to impress upon you the importance of other things that you may not be using within the software. We want you to get the best bang for your buck, and it's so important that you get to understand every aspect of the software, whether you use it or not, because at some point in time, as time goes along, you may testing 1 2 testing 1 2 testing 1 2. I know my audio. Gosh, testing says testing 1 2 test, and I apologize for the loss of the audio. All right, test 1 2 test 1 2. All right, there we go. You got it back. And again, folks, I really apologize with this computer giving these lapses in audio. I apologize, and it is something that my IT department will be working on this computer. All right, so 16 weeks of the navigational series, and actually the 16th week is putting everything together. Everything that you've learned in the prior 15 weeks. In the 16th week, we're going to put it all together. So now you're going to have a practical application on how to take everything that you've learned and now use it going forward. All right. And David, the audio doesn't drop out in the recordings. It's just here that the audio drops out. So I'm not sure what that is. In the recordings, though, you're probably going to hear me going test, test, test. All right. So again, I do apologize. All right. So now let's get in. You know how I always start off every week. I start off by giving a story, talking about how these tabs or how this specific segment is all going to be all about. So I'm going to start off. Pro Trader searches. That's what we're going to get into this week. All right, if I go to the next slide, we're going to be looking at Pro Trader searches. So we're still in the Unisearch tab, but we are going to be looking at Pro Trader searches today. Have you ever tried to use technical analysis and not make money? Do you know what technical indicators you should use? Do you know how many indicators you should be using? Now, there's 2 different types of investors in the market. You have the fundamentalists and the technicians. Fundamentalists look at things dealing with the value of a stock. And when value increases and earnings go up and inflation goes down, earnings is the engine that drives the stock market higher. Now, technicians, on the other hand, they time their trades. They look at price action to make decisions. Well, which one is right? Actually, folks, they both are. And VectorVest incorporates both ideals when analyzing stocks. We look at the fundamentals of the stock, but we have the insight of technical analysis. Technical analysis, though, and this is important, technical analysis is based off of 2 things and 2 things only. That's price and volume. Every technical indicator that you look at is only based off price action and volume. And this week, we're going to enter into the world of technical analysis and look at some of the indicators that you can use to time your trades. So what will we cover this week? Here's our agenda. We're going to cover what is technical analysis. All right. Now this may, if you're brand new to technical analysis, this is important to understand. What is Pro Trader? All right. Pro Trader is an add-on tool that you have within the VectorVest software. And because you are in this session today, I'm going to offer you a special if you don't have Pro Trader. How are you, Marvin? What indicators should I use as a technical trader? How can they help me to make money? And this is important. What timing signals should I use if I'm looking at technical trading? All right. So let's roll up our sleeves and let's get into it. Let's get into the software. Oh, how about that? I'm disconnected. Let me put my data feed back on. There we go. All right. And hopefully no one lost the audio at that point in time. Now, what is technical analysis? Well, let's go up to a market timing graph, or let's go to a graph in general. We're going to click on graphs. Someone give me a stock, any stock you want, any stock. First stock I see, there it is, MU. That was the first stock I saw. All right, so I type in a stock. I'm going to take everything off, graph layouts, put on simple, scroll down. I want to just look at the stock. All right. And as I look at this stock, this is a 1 year look back period on the stock. Now I can clearly see that this stock over the last year has definitely gone up. But from a technical analysis standpoint, how do I know when to get in and when to get out? Remember, I'm not using market timing in this sense. This is one of the few times where you will not use market timing to get in and out of individual stocks. I'm timing the stocks using technical indicators. And Jim asks, how do I find the previous sessions? At the end of this session, I'm going to show you exactly how to get to all of the previous recordings so that you can take a look at them. All right, so I'll do that at the end of the session. So I see MU is rising. Now, what kind of technical indicators can I use? I'm going to click on my graph layouts. And if I go down to add parameter here, and I go over to technical analysis and put my mouse there, there's 11 of the most popular technical indicators that can be used. And remember, technical analysis is only based off of two things, and that is price and volume. I can put on the ADX and directional movement. That looks at a trend of a stock. And if you want to know more about all of these different indicators, my suggestion to you would go to investopedia.com. All right, and type in any of these and they will break it down what each and every one of these indicators are. And you know, if you go to your broker's account or look at other websites, there's tons of technical indicators. Well, why do we have 11? Well, when we moved over from VectorVest ProGraphics 6 to VectorVest 7, we asked you guys, what technical indicators would you rather have in the software? In ProGraphics 6, we had about 23 different technical indicators, and we realized they weren't all being used. So we asked you, what technical indicators would you like to see when we moved over to VectorVest 7? And going down here to technical analysis, these were the top 11 responses, and that's why we have these 11. Now, a question will come up, well, what if I'm looking for this technical indicator and that technical indicator? How do I find it in VectorVest? And the answer to that is you won't. We have these 11. Right? And if there ever gets to a point where we're looking, where we need to add more, use it by way of the product improvement requests, because we can add any other indicators we want in here, put it in as your product improvement request, and hopefully we'll add it. But that hasn't happened so far with VectorVest 7. We've had these 11. And again, these are some of the most popular, especially something like MACD. A lot of people who use technical indicators will use MACD. And as a matter of fact, let's add that. So now in my graph, my price graph, I can add MACD, and MACD stands for Moving Average Convergence Divergence. MACD is a moving average of two exponential moving averages. So it's one moving average that looks at two other moving averages, but it's a very fast indicator. And one of the things that people like about MACD is that it has a moving average crossover. So you have a MACD line and a signal line. And then you also have a histogram which shows the movement, how strong or how weak the movement is as the stock's price moves. This is a fast indicator, and many people will trade off of the crossovers, but you'll find that that will get you whipsawed in the stock a lot. All right, but it's a fast indicator, and I can get in when the MACD crosses positive right here. Let's go back a date. Cross positive and get out when it crosses negative. All right, what is better, the white on top or the blue on top? And when I'm looking for the crossover, I want the MACD line to be above the signal line. The MACD line is the blue line. The white line is the signal line. I want the MACD line to go above the signal line. And then when it goes the opposite direction, that's an opportunity to get out of the stock and take your profits or play it to the downside. So that's one of 11 different technical indicators that can be used. If I go to add parameter, let's go down to technical analysis, and let's use something like Bollinger Bands. This happens to track the volatility of a stock, and we look for, just for those people who may be new, we look at what we call pinches. When they pinch, when the Bollinger Bands pinch, you look for the breakout one way or the other. And that's what Bollinger Band people will do. All right, you see how it's moving down, see the pinch, and you play the next candle after the pinch, and it tends to ride that band up or down depending on what happens from the pinch. All right, so that is another indicator. Notice that what is this tracking? Price movement. Notice what is the MACD tracking? Again, price movement. And then we have indicators that also track volume. All right, so technical analysis is based off of price and volume movement on stocks. So that's what technical analysis is. And again, I can add as many of these indicators as I want to my graph. Now, I don't need anything extra to add technical indicators to my graph. All right, that's important. I can add as many technical indicators and use as much as I want in my graph, and I don't need anything added to the software. Now, what kind of investor, and I want you guys to answer this. If I'm looking at technical analysis, what kind of investor uses technical analysis? Is it an aggressive trader, a prudent investor, or a conservative investor? What type of investor uses technical analysis? And everybody in the room should be answering. Alessandra says a smart one. Now, Land brings up a good question, a good statement. He said all, and I am going to go along with all, but for the most part, aggressive traders will trade primarily using technical analysis because they're timing their trades. They want to get in and they want to get out quickly, but I see more and more people saying all of them, and I'm going to show you how all of them will use technical analysis. Good afternoon, Robert. How are you? Now, one other thing that we didn't add, what else is another technical analysis tool that you don't see here? Talk to me. Oh, the volume went again. Okay, hold on. Test and 1, 2, test 1, 2. Sorry, so sorry. Test 1, 2, test 1, 2, test 1, 2, test 1, 2, test. All right, let me reset this. Test 1, 2. All right, it's back. Excellent. Sorry, I really apologize. This will be looked at. All right, so we now know that technical people, aggressive people will use technical analysis, but I'm going to show you how everyone will use technical analysis. What technical indicators do I not have up on price that we use for technical analysis as well? Nope, not volume. Hold on. What else am I not seeing? And we use it in the Jockey Club all the time. What other technical indicator? There we go, moving averages. That's absolutely right. So now I'm going to show many people in here who don't know how to add moving averages to your graph, okay? To do so, you notice that if I go down to add parameter, there's nothing here for moving averages. So how do I add them? Simply go over to the column, to the box here that says price, right click on it, and notice that I can add moving averages. I can add a simple, an exponential, and a weighted moving average. And usually I can trade off of just one moving average. If a stock's price goes above or below that moving average, that could be a signal for me to get in and out. Actually, I'm going to add a simple moving average of a 10 period. Because I'm looking at end of day, that 10 period becomes a 10-day moving average. And if I click on it, I can quickly trade. When the stock goes above the 10-day, I can get in. When it goes below, I get out. In, out, in, and out. That's a simple way of doing it. But a lot of people will use moving average crossovers. So now I'm going to add another moving average. I'm going to right-click on price, go down to add moving average, go to simple, and go to 20. Now I'm using a smaller moving average combined with a bigger moving average Check that box. And now I can use the crossover. So instead of just getting in when it moves above one moving average, notice, why not stay in it until the moving averages cross? All right, so that's a great way to keep you into a nice trending stock and not get whipsawed as much as just using one moving average. And that is a great combination of a 10 and a 20. That's a good, prudent moving average. It'll get you in and out of a stock. But now when a stock moves sideways, moving averages don't work nearly as well. Moving averages works when a stock is trending down or when a stock is trending up. One of the favorite moving averages that we use, especially because we're a little faster, I can add this, change this from a 10 period and a 20 period by using the arrows to the right. Now, I'm going to show you something else. What is the difference between a simple moving average? Go up, add parameter. Oops, sorry. Right click, go add moving average. I'm going to add a 10 exponential moving average. Right click on price, add a moving average. I'm going to add a 10 weighted moving average. Now, all three of them are 10-day moving averages, but I'm going to show you how they track price differently. Here's my EMA, and then here's my weighted. Now notice, let me zoom in. Notice how the weighted moving average tracks price a little closer, so it'll get you in and out of the stock a little faster. Whereas my regular moving average is towards the bottom, and my exponential moving average is right in the middle. All right? So depending on how quickly you want to get in and out of price or in and out of your stock, will determine which moving average you will use. And primarily here at VectorVest, we will use an exponential moving average. Means that as the price, as the information, we're looking back 10 days, we put more weight, more significance on the most recent data. That's why it tracks price quicker. Whereas a simple moving average just takes the 10 days, divides by 10, and gives you a simple moving average. And it doesn't track price nearly as closely. So as a trader, I want to find a weighted moving average does a great job of getting you in and out just a tad bit faster. Whereas the exponential gives you a little bit more time to let the stock run. All right, so that's the difference between the three different moving averages. So now we've taken a look at some technical analysis as far as indicators, and now it's taking a look at some of the different variations of moving averages. All right, so now let's ask the next question. What is ProTrader? ProTrader, we use ProTrader in the software specifically for searches. So now I told you that you can put any technical indicator on a graph. You don't need anything. But if I want to search on those technical indicators, that's where ProTrader comes in. ProTrader is an add-on module that allows you to run searches, keywords there, based on many popular technical indicators. You can do it individually or combined. What else? ProTrader types of searches we can look at: moving average crossovers, support and resistance, and stochastics. These are some of the searches that can be used from a technical standpoint to find you the stocks that are meeting those criteria. Let's go back into the software now. All right. Next question is, do I have to have ProTrader to be successful with VectorVest? And the answer to that is no. ProTrader is an enhancement. It is an enhancement, especially for those people who may trade a little faster. All right, and if you do, technical analysis is a great way to do that. And where am I going to find it? I'll go to the Unisearch at the top, and we're going to go to the folder that says ProTrader. Now, when I open that, look at all of the technical searches that are already here and available for you right off the bat. Without ProTrader, you don't get this folder. All right, so it is an enhancement. And the next question will come up is, how much is ProTrader? Well, excuse me, ProTrader is a one-time fee of $495, which means you pay for it once, and as long as you have a subscription to VectorVest, you will always have ProTrader. Now, if for any reason you cancel your subscription, you lose your ProTrader, but if you come back, your ProTrader is still there. So as long as you have an active subscription to software, you will always have ProTrader. You only pay for it once. It's a once lifetime fee. Now, what I am going to do for you, since you're here and after I show you what I need to show you with the ProTrader searches, if you like it, give VectorVest a call. Tell them that you saw this on the Training Tuesday and that you want a free 2-week trial to ProTrader. And if you convert from that trial, that free trial, if you convert from that free trial to a subscription, I'm going to take $100 off. All right. You'll now get it as $395 one-time lifetime fee, but you have to convert from your trial if you want that to happen. Question, can we set up 3 and 8 EMA crossovers? And the answer to that is yes. We're going to get into that. All right. Now, as I now look at what indicators I should use. So when we go back to the graphs, what indicators should I use? Well, I showed you some that you should use, all right, that you can consider using. Any one of the 11 that we have can be added. I'm going to put back on the Bollinger Bands. I'm going to go back to add parameter, technical analysis. Let's add back the MACD. Oh, I already had them, but I'm going to put them on MACD and Bollinger Bands. So now, these are two, and this is just looking at a 2-month graph now. I love that you can see the graphing capabilities on here. And now another question, let's add moving averages. We were talking about the 3 and the 8 exponential moving average. All right, Diane says, unless we have real time, then it's part of the monthly fee. That is correct, Diane. Thank you for bringing that up. If you have real time, ProTrader is automatically included in your ProTrader, is automatically included in your real time fee. Kamel says, with all respect, ProTrader is more than an enhancement. It's a must to maximize profit. Kamel, I won't say that. And I won't say that because not everybody needs it and not everybody is as aggressive as other people are. And maybe they don't want to time their trades. And that's fine. That's totally fine. So I won't say that you have to have it, but I think it is a great addition. All right. Now, let's add those moving average crossovers. Someone asked me about the 3 and the 8 and adding it. So let's do that. Let's right-click on price, go down to add moving average, and let's go down to exponential. We'll click on 10. Let's do it again. Right-click on price, go down to add moving average, go over to exponential, and click on 10. Now, the question comes up, well, wait a minute. Neither one of those are a 3 or an 8. You're right, they aren't. So I use my down arrows to change that first 10 to a 3 and change the second EMA price 10 to an 8. Let's take off the Bollinger Bands. And now I check those two boxes. I now have a 3 and an 8 exponential moving average on my graph. Look how well they, when the 3 crosses above the 8 and they don't cross back below. Look at that, folks. That is a beautiful way to time an individual stock. And when they cross negative, you get out. That's a great opportunity to make some money. And this is on an end of day graph. When they cross again, get into the stock. And I'm looking at now the 3 and the 8 along with MACD. So I can combine any semblance of technical indicators onto my graph. Now, how about this? How many indicators should I use? Now, the best technical traders are going to tell you, you don't, okay, volume is gone. There we go. Sorry about that. We'll go do the test again. Test 1, 2, test 1, 2. Test 1, 2, test 1, 2. Man, I really apologize to you guys. Testing 1, 2, test 1, 2. Test. There we go. All right. So the last thing I just stated. How many technical indicators should I be using? The best technical indicators or technical analysis people will tell you you don't need to use any more than 3 technical indicators. Once you get past that number, you start getting caught up in analysis paralysis because you're going to find 2 indicators that tell you it's okay to go, one that's going to tell you no, and you're going to be, oh my gosh, I don't know what I should do. Notice that here, I'm using moving averages along with MACD. I'm going to show you something. See where the MACD crosses? Look at when my 3 and 8 cross. Folks, that's as simple as you can get. Now, even if the 3 and the 8 cross negative while the trend is in place, use the trend. All right? Give me another stock, any other stock. One more. Give me a couple. I'm going to take a couple of other stocks. Type them in. Thor, THO. Facebook, THO, comma, Facebook, comma, YRD, comma, and J&J. All right. So let's take a look at all of these. And I'm using just the 3 and the 8 exponential moving averages along with MACD. Let's see how well they do. All right, here's Thor Industries. Where's my crossover here? And look at that, my MACD crossed over as well. Look at how the 3 and the 8 still have me in this stock. Folks, I'm looking at this on a graph. If I like what I see on the graph, why not be able to use ProTrader and set that up as a search to find these at the right time, that maybe the moving averages and the MACD are both hitting at the same time. All right, and I can change the colors on my 3 and the 8. Let me show you how to do that. Right click on the EMA price 3, click on choose change style, change the color. We like to use green on the 3. Right click on the 8, it's already red, and that's simple. So now the reason why we change the colors to green and red, simply put, when green is above red, it's a go. When red's above green, it's a stop or get out. All right, makes it simple. And thank you for that, Tony. All right, so use those together. Great opportunity to make some money. Now, Kamel says, I use the DPO9, ADX, and stochastics. That's fine. That's 3 indicators, and you probably don't want to go any more than that. And we're going to talk a little bit about the DPO and the stochastic as we go through this presentation. But let's go to the next one. Let's find the last crossover. Now, look at that. The 3 and the 8 crossed, but the MACD was still negative. You're now at a quandary because you have to make a decision. Well, if I jump on board with just the 3 and the 8, the MACD is telling me something is going to happen, and look at that. All right, but I could still use the 3 and the 8 as a means until they cross to the downside. MACD should be a confirming indicator. The 3 and the 8 should be your primary indicator, and maybe if the MACD doesn't match up, maybe you go to the next stock. All right, does that make sense? Your MACD should be a confirming indicator. Same thing with YRD. The 3 and the 8 have crossed. You had an opportunity to make money. Your MACD never, never confirmed it until later in the trend. So what do you do in this situation? I still say use the 3 and the 8, but now maybe you tighten the stops on the stock while you're in it because your MACD is not confirming that upward trend. When I have them both in play, I can then trade that stock a little less, a little bit more freely. But here, because the 3 and the 8 cross and the MACD hasn't confirmed it, I tighten the stops on my stocks right away. Hopefully that makes sense. Let's go to the next one. Let's go. Here's the 3 and the 8 cross. The MACD crossed at the same time. Look at that. I had an opportunity. This exploded up. And then I could have gotten out right here with the 3 and the 8 have crossed prior to the MACD, but the 3 and the 8 did cross. But look at the movement on the MACD is starting to lose its momentum. All right, so on a graph, I'm just looking at some of the graphs that you put up in here, stocks you put up in here. Using technical analysis helps you to time your trades. Notice I'm not looking at market timing here. I'm timing the trades based on technical analysis. So how do I choose which indicators I like? You go through, look at the indicators. Some of them are going to be faster. Some of them are going to be slower. Use the indicators once you put them on the graph that fits you better. How about finding if a stock is overbought or oversold? We'll click on Add Parameter. We'll go down to Technical Analysis. And a great one to see if a stock is overbought or oversold is RSI. All right. That has levels. We could put RSI 9. That has levels between 30 and 70. And when it's below the level of 30, the stock is considered to be oversold. And when it's above the level of 70, the stock is considered to be overbought. All right. And that's going to really help you when the stock is moving sideways. All right, that'll help you, especially when the stock is moving sideways. Remember, moving averages are only really good when a stock is trending up or trending down. When a stock is moving sideways, puts on a 6-month graph, when a stock is moving sideways, then maybe you use an indicator like RSI to help you to make a decision. How does the signal line in the MACD line trigger a buy or a sell? All right, because remember, the MACD line is a moving average of 2 exponential moving averages. And the signal line is looking at those 2 exponential moving averages. I think it's a 12 and a 26. Yeah, a 12 and a 26. And then the MACD line is the 9-day exponential, the 9-period exponential moving average. So I'm looking at the 9-day exponential moving average crossing above the difference between the 12 and the 26. Now, do RSI and stochastics normally match? They both track overbought or oversold conditions. Now, the difference between RSI is that it's one line. And I'm going to now add stochastics. Click on Add Parameter, Technical Analysis, and add stochastics. What's different? Well, stochastics is looking at two moving averages, a percent K and a percent D. There's a lot of math behind this. And the difference between this does have levels too. The levels on the stochastics are 20 and 80. On RSI, it's 30 and 70. But notice that because I have two moving averages in stochastics, I have crossovers. How about here? I have a crossover on stochastics. And now maybe I look for the crossover. Now the stock is out of the area of being oversold, very close to being oversold. Now I wait to see if the stock's price starts moving up. Wait for the crossover on the 3 and the 8. Boom, that gets me in. All right, that's what it is. 70 or 80. RSI, Andrew, is 70, and stochastics is 80. Now, VectorVest has a buy, and MACD has a crossover. What do you do? If VectorVest has a buy, let me add recommendations up here. I can get in before a stock gets to be a buy. How about back here when the stock is a hold? All right, stock is a hold. The MACD is crossed. The 3 and the 8 have crossed. I can ride that into it being a buy. Notice that it never really got me out, not even here. MACD was in place. RSI wasn't overbought or oversold. Stochastics had me at an oversold scenario, as an overbought scenario, but the price, this is what you're going to primarily gauge when you're going to get in and out. Use the price movement of the stock. Use your moving averages on the stock. That is your primary signal to get in and to get out. These other indicators are backup indicators. Oversold on stochastics is 20. That is correct, Andrew. And on oversold on RSI is 30. All right. So looking at the graphs, you get a lot of great information on how to time and get out of your individual stocks. And stochastics and RSI are both looking at overbought, oversold. And Alessandra, look at that. They pretty much do mirror each other. But I like the stochastics does have two moving averages because I can get in earlier on the moving average crossovers on stochastics. All right. So you choose your indicators based upon how if I'm going to look at two indicators for overbought, oversold, choose one. I like stochastics because it has the crossover. RSI does a good job, but I like stochastics. It gives me a little bit more confidence. All right, so you choose indicators based upon how you feel you want to invest. Now, how can they help me to make money? How can these indicators help me to make money? Glenn, what are your favorite crossover searches? We'll get to that in a second, Colin. How can these help me? Hold on. Okay. Searches and timing. This is important. So we've talked about market timing. And what market timing calls fit the type of investor you are. Everybody has this in their slides. All right, there we go. Volume went out again. All right. Check. 1, 2. Check 1, 2. Check 1, 2. Check 1, 2. All right, it's back. All right. So I'm going to tie some searches in with the types of investing you're going to do. As a conservative investor, use your confirm calls. As a prudent investor, use a combination of confirmed or the DEW. Aggressive, you're going to use the primary wave along with the GLB, whichever fits right for you. Speculative, primary wave you're going to use. And for pro trader, notice what I have here. The timing signals that you primarily want to use is the DEW. Why? Because the DEW is a technical timing signal. Why not use that along with your technical searches? Does that make sense? That should make sense. And notice that I do have these are suggestions. All right, I'm not telling you to do it this way. I'm just giving you some semblance of market timing to go with the type of investor you are. But if you're looking at pro trader searches, why not use a technical system? Andrew says, how about for the progressive? Prudently aggressive. Notice that a lot of times I have combinations of the two within when I move from one to another. But prudently aggressive, I would stick somewhere in between the DEW and green light buyer. All right, that's just my suggestion. I'm going with somebody who's prudently aggressive. Primary wave may be too fast for the prudent investor. Confirm calls. That's on the fringe of being prudent because I really want to leave that to the conservative. But if I'm prudently aggressive, I wouldn't mind using the DEW and the green light buyer. But notice that for per trader, we are sticking with the DEW. All right, let's get back into the software. And now let's go to the Unisearch tool and let's start using that Pro Trader tool within the Unisearch. Now, the first thing that I want to use is I want to start off with the aggressive trader. What, if you're looking at these, what is the best suited technical indicator for the aggressive trader? I want to see what you want to look at. And when you're looking at these indicators, what do you think is best used for the aggressive trader? All right, type in the room. And if you don't want to, you don't have to. And if you're not sure, that's fine. I want to see, for those of you who want to talk about it, what do you think is the best used? There we go. That's what I like to see. Sylvie, a shorter moving average. All right, now I didn't ask for market timing. Hold on, I didn't ask for market timing. I asked for which ones of these searches would you use for the more aggressive, and there we go. Arup says 5 and 10. Colin 5 and 10. Mura 5 and 10. Stochastics, that's not a bad idea as well. All right, right now I like the idea of using shorter term moving averages for the more aggressive trader. All right, that was the answer I wanted, and many of you gave me that answer. All right, but Mark and Nick didn't ask for what timing signal. I asked for, if you're looking in this folder, what searches would you use more so for the aggressive trader? And we're going to do that. Let's start off with the 5 and 10 exponential moving average. Exponential, why? Because I think that that's a better way of getting in a little earlier and getting in and out a little earlier. All right, notice that when I click on the search, this is what Pro Trader is going to do for you. It's going to add that technical component to the search. Can I create a 3 and a 5? Yes. As a matter of fact, I'm going to do something like that in a moment. Now, the first thing we need to do, now we go back to what timing signal we're going to use. Remember on that slide, it said to use primarily the DEW. I'm going to go to the graphs. I'm going to bring up the market timing graph. Let's find the last DEW up call, change it from confirmed calls to DEW. When's the last confirmed DEW call up? 8/31 of 2017, and we're still in that DEW call up, right? Michael, if you don't see that Pro Trader search and you signed up for Pro Trader, give us a call to find out what's going on. All right, Michael, give our product support staff a call. This is the date that I'm going to use for my testing purposes, 8/31 of 2017. So I'm going to set my calendar back to the last DEW up call, which was 8/31, and I'm going to run the 5 and 10 exponential moving average crossover on that date. We'll click on run. Now let's talk about that. We're looking at an EMA 5 is crossed above the EMA 10 in the last 1 day. Price is greater than $1. Average volume greater than 100,000 shares. Stock exchange not equal to the PX and Q. Let me double check here. And we're not looking at ETF short. And yes, we can definitely graph them. Let's run the search. So the 5 and the 10 exponential moving averages crossed on 8/31. Let's do this. Let's highlight these. Right click, view on the stock graph. What was the date? 8/31. Let's go find 8/31 on my graph. 97, 8/31. Zoom in. What were my moving averages we were looking at? The 5 and the 10 exponential, right? Let's take off some of these things. Remove. So we were looking at an exponential 5 and 10. I'm going to move this up to a 5, move this up to a 10. Look at that. Right on that day, the 5 and the 10 crossed. Look at what happened to the stock. All right, let's go look at the next stock. How did I change the color, Diane asks. You would right-click on the EMAs, right-click, go down to change style, and then right here where it says line style, you would click in there and choose the color that you're looking for. All right, let's look at the next stock. 5 and 10. Look at that. The 5 and the 10 did cross. Does it always work out? No. So how do you trade this? Well, if I got in on the 5 and the 10 crossing, how about I get out on the 5 and 10 crossing in the other direction? What does that do for me? The stock would have been a loss, right? I limit my loss. I get out here instead of getting out somewhere down here. Can you combine the 3 and the 6 crossover with new buy ratings? The answer to that is yes, I can. All right, I definitely can. But real quick, let me keep going through these. 5 and 10 cross. Did that work out? Did you have an opportunity to make money before it crossed back down? Yes. Next one. Whew. 5 and 10 cross. Look at that. And this is the power of having Pro Trader, folks. This is the power of having Pro Trader. All right. It will be nice to have a stop for the 3. And I understand, Alessandra, and we're working on that. And look at the 3 and the 8. They never cross. Even on these pullbacks, the 3 and the 8 never cross bearish. Woo. And this is on an end of day basis, folks. All right. 3 and the 8 cross, 3 and the 8 cross down. I would have gotten out instead of riding it all the way down. Did it have an opportunity to go back up? Yeah, I could wait until the 5 and the 10. This is not 3 and 8. Wait until the 5 and the 10 went back up. All right. CRY. Look at this. So over and over, I have great opportunities where I can make money and I can limit my losses real quick based upon the 3 and the 8 as well. Let's do a quick test of the top 10 of these. Test them all the way up until right now, 4.76%. That's looking at all of them. And I had an opportunity to find me one that went up 24%. The losers that did go against me, they're manageable, and we outplaced the market. Not by a lot, but enough. We still outpaced the market overall. How did you get the vertical line? Hold on a second. Let me go graph these. My vertical line is my date line. All right. Instead of looking at crosshairs, I prefer to look at date line. All right. And that's what I did. All right. Let me close that out. Let's go find another one that's for. All right. So that was exponential. Let me show you the difference between how exponential works along. I'm going to use the 5 and the 10 again, but on a simple moving average. That's MA. 5 and 10 on a simple moving average. Quick test the top 10. It did okay, but it didn't outpace the market. It wasn't as good as the exponential. All right. Did we find a good winner here? We did. Found LAD. We had now more losers, but none of them were unmanageable. And now let's use the weighted moving average. I'm using the same 5 and 10. I'm running the searches. Quick test top 10, 1.72. I did have a bigger loser, and where now you have a better idea of why we like to use the exponential as opposed to the simple or the weighted. I wanted to show you the difference between all three. All right, what else can we do? So now somebody asked me about the 3 and the 8. Or what did you ask me? A 3 and a 5. All right, let's do that. I want to still use exponential, so I'm going to go back to EMA. All right, and now let's change it. So if I click on the value, I can change. I can put in a 3. And someone said a 5, so cross in the past days above the 5. So this is a 3 and a 5 exponential. Run it. Let's see what it did. 2.65. All right. Let's use what we use in the Jockey Club. We use a 3 and an 8. Click on OK. Run the search. Quick test. Test. Test 1. Test 1, 2. Test 1, 2. Testing 1, 2. Test. Test, test. Test, test. 1, 2. Volume is a go-go. Thank you, Alessandra. So you notice that as I was changing the values, how about the 3 and the 8? All right, the 3 and the 8 did even better. The 3 and the 8 gave me 6.36%, and we almost doubled what the market did. Again, this is why we like the 3 and the 8. I found 3 double-digit winners based upon that. I did have one. Probably I would have not let a stock go against me more than 10%. All right, so the 3 and the 8 worked out well. We did the 3 and the 5, but that's how you change it. All right, doesn't exist in the system that can make all choices in days and give the best result. I'm not sure the question you're asking, Alvaro. BJ says, would you go over the crossover long again, short again? The crossover, which one? The crossover. All right, so all I did on changing the values, notice that in this, I'm saying that it crossed above and whatever 2 moving averages I wanted. All right, hopefully that is the answer. Can you try the 8 and the 20? Yes, I can try an 8 and a 20 real quick. Go at 8, crossing above the 20 in the last one day. Let's run this search. Do a quick test of the top 10. Woo! 8.99. And this is still exponential, folks. All right, we do love the exponential moving average. You are changing by hand the system. Don't make it by itself. I'm still not sure what I'm asking, what you're asking. What is the difference between percentage price change and total ARR? Percentage price change shows you the difference between 831 and 10.3. Annualized rate of return says that based upon this time period, if I could have done this over and over in the same time period, about a month and a half, how much I would have made over the whole year. That is the difference. Hopefully that answers your question. So the 8 and 20 works better. The 8 and 20 works well as long as if that's what you want to trade, how you want to trade, that's fine. All I'm doing is introducing to you the capabilities of Pro Trader. You can set up whatever moving averages you want, Lan. That is by all I'm doing is showing you what you can do. That's my job. 8 and 20 looks good, right? In that time period, it does. All right, let's go use another aggressive one. We were looking at MACD, right? Let's go with a MACD crossover. All right, I want to save that. Simple MACD crossover. All right, sitting from 831. Quick test the top 10. 8.45%, only 2 losers. Look at that. Again, this is why it falls in the line with the more aggressive trader. All right, that MACD that's simple MACD crossover and taking advantage of the stocks based on the 6-day on the moving average crossover. Let's do one more. Let's do another moving average crossover. Remember we were looking at MACD? Well, the MACD looks at the difference between a 12 and a 26 exponential moving average and a 9-day moving average. How about looking at the 12 and the 26? So, Len, let's try this one. The 8 and 20 did better. How about the 12 and the 26? At EMA 12 crossing above the 26 in the past 1 day. Let's quick test the top. Whoa, that did it even better. 12.83%, all winners. All winners. Folks, all I'm doing is opening up your eyes to the power of Pro Trader and the different moving average crossovers to help. That's for the more aggressive trader. All right, I'm going to get to that, Kamel, when I get to the combos. All right, the prudent investor. How about using that DPO, that same thing we use on every night in the color guard? All right, let's do that. Let's go to 20-day DPO. Now, John says, what would we expect if you started prior to 831? Well, remember, right now, in essence, I am using some semblance of market timing to get me. If I got in earlier than the market timing call, I may or may not have made money. All right, so that's to answer your question, John. I'm using market timing and I'm using the power of the Pro Trader to find me the stocks that match up with my timing. If the market is moving in that direction, 80% of the stocks should be moving. What I'm doing is I'm looking for my technical searches to take advantage of a technical timing signal. We're going to do the 20-day DPO. Quick test the top 10. 6.7%. 8 winners, 2 losers. This is good for the more prudent person. Looking at DPL, and look at the stocks that are found based on that too. More prudent stocks. All right. What else prudent? How about we didn't talk about support and resistance, right? That's a great way to trade into stocks. Let's go back to the graphs real quick. Go back to some of these stocks. One of the things that I love about the VectorVest software is that we do track support and resistance for you. We draw the lines. I'm going to click on Add Parameter. Go down to Technical Analysis and find Support and Resistance. Scroll down and put those on. Notice it automatically tells you it found 2 support and 2 resistance lines. Automatically. How about finding stocks that retrace from support or break through resistance? Those are great opportunities to make money. All right, so we're going to do a search. Look at this, retracing from support. Man, bounces off, goes back up. How about I use a search where we look at support and resistance, retracing support. I'm going to run that search as of 831. Let's quick test the top 10. Now, 3%, we kept up with the market. Something I want you to see. Notice that we're looking at price retracing from support by 2%. That might be a lot. The stock might have made a 2% move from support. Let's do this. So this finished at 3.10%, right? I'm going to click on it, and I'm going to change that to 1%. Let's get in a little earlier. All right? Price is retracing support by 1% instead of 2 on the same date, Run the search, quick test top 10. Woo, it didn't do as well. I want you to see that. All right. When you're using support and resistance and retracing and breaking through, the amount of percentage breaking through, that 1% got you in a little earlier. But the 2% gave you more confirmation. There you go. Kamel said the 2% is more safe. All right. But I wanted you to see you can change that. Let's do it one more time. Let's say it broke through support, retracing from support by 0.5%. You're going to really get in a little quicker, right? Let's do a quick test of the top 10. Even it didn't work out as well. I did find a big winner, but looking at that retracing support by that 2% gives you more confirmation. Run the search again, gives you more confirmation, and you can feel a little bit more comfortable that you can manipulate those things within the search. I'm going to do one more. Actually, I'm going to move over to the conservative side. All right, so now the prudent investors, we have some technical searches for you. We definitely showed some aggressive. Now, if I'm going to look at moving averages for the conservative investor, what works well? What is the conservative investor looking for as far as moving average crossovers? All right, Mark says, how can I do one with DI plus minus under ADX? I'll help you with that in a second. Alessandra says 40. All right, what do the big institutions look for before they jump on stocks? I'll start off that way. What do the big institutions look for when they jump on stocks? All right, the 50 and 200, right? All right, so let's do that. Let's say that we got into a good DEW call, and we want to see the stocks that the big investors are going to start getting into. Why not run it? The 50 and 200 EMA. I'm going to run it. Let's see how well that would have worked. So now this is for the more conservative investor using technical analysis. Quick test top 10. Didn't work out so well. So now how can we fix that? Let's say we get in a little earlier than the big boys. I'm going to show you how to do that. If they use the 50, why not go to a 40? And crossing above the 200, let's go to maybe a 100. That's a little earlier, right? Let's click on OK. Run the search, quick test the top 10. There you go. So now we got in, and now the big institutions took our stocks up. We jumped in a little earlier than they did, and that's in 2 days. Now that's from 8/31 to 10/3. All right, 20 and 40 week MA for conservative entry. Well, in this case, I'm using a 40 and 100 day instead of on weekly. All right. Can I change this within the last how many days? I can change how many days. All right, but I can't do it as far as weeklies, as far as that's concerned. All right. When you change the values in the search, do they default back to normal when you close it? No. Notice how I changed it. Now, when I go to another search, watch this. I'm going to go to RSI. RSI crossing above 30. Notice that as soon as I click on it, what does it ask me? Do I want to save the search? And that's where if I want to keep this, I would click on yes, and I would change the name to reflect the 40 and the 100. As a matter of fact, let me show you how. Click on yes, and instead of using the 50 and 200, I change it to the 40 and 100 EMA, and now I would save it in the My Long Searches. Click on OK. And guess what? Now under My Long Searches, I now have the 40 and 100 day EMA crossover. So that answers your question, Jay. All right. Now let's go to one more for the for the conservative. RSI. Remember, this is the stock. This is the indicator that tells me if a stock is overbought or oversold. Well, when RSI crosses above 30, the stock is now getting out of the over test. All right, lost it again. Test 1 2 test 1 2 test. Really apologize, folks, for the loss of audio. Test 1 2 test 1 2 test. There we go. Okay, you got me. So you notice how I saved that search under My Long Searches, and now I'm moving over to RSI. RSI is an indicator that tells you when a stock is overbought or oversold. The level for oversold on the RSI is 30. So how about we find a stock that is moving from being oversold back into its normal area? All right. This is nicely good for the conservative person as well. All right. Run it. Let's do a quick test of the top 10. Woo! 8.1%. More than doubled what the market did. Nice stocks that were found as far as price wise. And all I'm doing is I'm still using my 831 date, which is my DEW, but I want to be a little bit more conservative. So I use a little bit more of a conservative technical indicator to help me. Finding a stock that's gotten out of the level of being oversold. Using market timing, the market should pull those stocks up now, and you're using technical analysis for that. Ken asks, what does the DEW mean? DEW stands for the 3 technical indicators that are included in that in that timing signal. Let's go over to the market timing real quick. I'm going to change the graph layout to reflect the DEW. D stands for the trended price oscillator. It moves around the 0 line. E stands for envelopes. We provide you with upper and lower envelopes to keep price within a range. W stands for a 30-day weighted moving average, which is depicted by this white line. From a market timing perspective, looking at the DEW timing call, what we look for is the price to break above the 30-day weighted moving average and the DPO to go positive. The envelopes are there just to show you the upper and lower edges of price. And that's what we're using for the DEW. And this is a technical search, a technical timing signal, which is why I want to use it with my technical searches. Question that comes up is, can we use star search? Sure, we can try that. This uses the DPO crossover, the 20 DPO crossing above 0 in the last 1 days, and Bollinger Bands, the prices crossed above the upper band in the last 2 days. Using my same timing, click on the quick test of the top 10, 1.46%. All right, so another technical indicator, I found a stock that did double digits, but I also found a stock that went down double digits, and it didn't keep up with the market. With a risk management strategy, just pro trade searches are great in the beginning of each market, depending on which timing signal you're going to use. And again, I want you to hone in on the DEW for using your technical searches. That is my opinion, and I'm going to impart that over to you. Tie the market timing to the type of searches that you're using. That's why that slide is in your handouts, so that you get a better feel of that. All right, now I'm going to start doing some combinations. How about the DPO and MACD? All right, we'll go back up to the DPO and MACD. So the DPO crossed above the 0 line, and the MACD crossed above the signal line. Put those two together, combination. And this is sorted by percentage price change. So not only do we have the crossovers, but we're finding the stocks that have gone up the most. All right, let's do a quick test of the top 10. Good Lord have mercy, 15%. You found 3, 4 stocks that went up double digits. Lower dollar stocks, great combination of looking at DPO and MACD. And I love that we're sorting these by the stocks that have gone up the most, looking at those crossovers. A great combination. Look at that. 4, 8, 12. We did 3 times, more than 3 times what the market did. Man, that's nice. All right, let's look at another combination. How about MACD and exponential moving average crossover? All right, so how about there? All right, MACD crossed above the signal line within the last 2 days, and the EMA 1, which means price crossed above the 10 EMA, the 20 EMA, and the 30 EMA, all 3 of those in the last 2 days. Sorted again by percentage price change. Let's do a quick test of the top 10, 11.97%. Look at that. These combination, folks, are no joke. Someone asked me to do a combination. I don't remember what combination it was. Can we set up at 3 and 8? Somebody's going to tell me you wanted a combination. I'm not sure what it was, but I'm going to do another combination. How about MACD and RSI? So now I'm looking at MACD and finding the stocks that have gotten from being overbought, from getting oversold back into the normal area, and the MACD is crossover. All right, let's run the search, do a quick test of the top 10. Man, these combinations, and you only get this with Pro Trader, folks. Look at these combinations. How about I found 1, 2, 3, 4, 5, 6, 7, 8 stocks that went up double digits. All right, so now somebody asked me about the DI crossover. Let's go find ADX, and I'm going to change the value I'm not going to do it that way. Click on OK. I'm going to take off the ADX, delete the parameter, but I'm going to add another one. Stocks, price volume, price split adjusted. I'm going to go down to Pro Trader, and now I want to do the directional indicator. There you go. You wanted to look at you wanted to look at the directional indicator. All right. And how about the DI positive crossed in the last day above the negative? All right, we'll do that, and then we'll use that with MACD. All right, let's take a look, see how that worked. Quick test the top 10. Folks, you got a lot of flexibility with ProTrader. Quick test top 10, 10.5%. There you go. Who asked me that? That was Mark. You wanted the DI crossover? Look at that. All right, and I tied that in with MACD. Let's take off MACD. Let's just use the DI crossover. All right, we have all of the other parameters, just the DI crossover without the combination of MACD. Let's do a quick test of the top 10. MACD definitely helped you out a little bit more. How about that? Combination of new buys with 3-8 crossover. All right, let's do that. Folks, you guys are bringing up great questions here. And again, I'm going to go to set up the 3-8 crossover. All right, so I'm looking at the 5 and the 10-day EMA. Remember, we didn't save the 3 and the 8. All right, 3 and the 8. And what's the other combination part of that? It was the stocks with a new buy. Stocks. What am I looking for? Here we go. Recommendation equal buy. Actually, let's do this real quick. I'll do that quick test. It actually worked out. Let's do it this way. Let's go to trends, new stuff. All right, where's trends, new stuff, new buys? All right, we put in new buys. Here we go. Stocks are the new buys. And now you want the 3 and the 8. I'm going to add the 3 and the 8. Stocks, price volume, price split adjusted, Pro Trader, exponential moving average, EMA. And let's put in the 3 and the 8. So now I can take any search and add in technical analysis, any of my favorite searches, and add technical analysis. So this is stocks that have just become a new buy on that DEW call. I'm using the 3 and the 8. Run it. I don't know what this is going to do. Let's take a look. 4.81. That's not so bad, right? All right. So I found stocks that hit a new buy with the 3 and the 8. So I had a lot of that I wanted to do. ADX and volume spikers. Where's volume spikers? Let me go find it. I think it's on the price volume, but that's all right. Click on no. Volume spikers. Let me change that back. Price volume. Let's go look at the searches. Price volume. Scroll down. I don't know where volume spikers is. Special searches. TU. I'm not sure where volume spikers is. But as many searches as I know we have, I'm not sure if we have volume spikers. Alan says, Glenn, should these crossover combinations perform well in a downward market, or we should use it? Should we use a down strategy? Listen, if these work in upward markets, why not think about using them in downward markets? Nothing wrong with that. New buys 3/8 most of the time doesn't generate any stock. Oh, my 3 and the 8 search actually did generate stocks, Kamel. But Alan, you can, if you like what they do in an up market, why not use them? How about when we go look at this Pro Trader folder? How about not only do we have bullish ones, we got bearish ones. We could do the same thing on the downside. So yeah, you could use them both the upside and the downside. All right, I'm about 5 minutes over, but I think I covered everything that I wanted to cover. Does anybody have any questions? Pro Trader is a powerful tool that will help to enhance your trading. All right, and my thing is, again, if you're interested, if you don't have Pro Trader and you're interested in trying it, call up our product support staff. Let them know that you went to Training Tuesday and tell them that you want a 2-week free trial to Pro Trader because you were here. All right, and if you convert from that trial, folks, instead of paying the one-time fee of $495, you will now pay a one-time fee of $395. I'll knock $100 off of that. All right. So thank you for being here and always supporting the Jockey Club, always supporting Training Tuesdays. You guys still make this one of the most widely attended webcasts every week. Every week. Alvaro says, what is better, buy a short or put whatever you're comfortable with. Not everybody can short stocks in their accounts. They may not have the margin to do so. You have to have a margin account to do so. If you don't have a margin account, maybe buying a put to help you take advantage of the downside will help you. Andrew says, will these slides come with the webinar replay? You have access to the slides right here. But yes, I will have the slides in the replay email out to you. Any more resources for training for Pro Trader? Actually, let's try this. Before you all go, let me show you a couple of things. I'm going to show you how to get to all of the previous. All right, hold on. Check. Check. 1, 2. Check 1, 2. Check 1, 2. Check 1, 2. Check 1, 2. Okay, you got me back. All right. So what I'm going to do is show you a couple other things. One, how do you get to all of the previous recorded webinars? Let's go over to our main website. All right, and from our main website, go over to live events. No matter what country you're in, select your country. I'm going to select the U.S. All of the upcoming events, the money show starts this week, will be there. And all of the other online and or courses that we have will be here. Webcasts, Training Tuesdays here for you. You can register. If you knew somebody who's new and you want them to try it, tell them to register for the Training Tuesday. Archived webcasts, this is where you find all of the replays. Go to Training Tuesday. And this one is Unisearch Part 9. And I'm going to check that for you real quick, Andrew. I have them did different. Unisearch Part 7, 8, 9. If I click on that, please don't play. Yeah, it's playing. Crud. Stop playing. All right. That's for number 7. I'm going to go to number 8. It's going to. That says 1.117. Let's go to 7. Let me see if it has the same time stamp. Nope, different timestamp too, Andrew. So I don't think that, I'm not sure. I'm looking at, they don't seem to be. The screen may look the same, but look at the session numbers at the top for 7, 8, and 9. They are all different. 5, 6, they are all different, my friend. All right. So I did check them. They look like they are good. All right, as far as what I can see. But this is how you get to all of the previously recorded sessions. Number 1, there was something else I was going to show. I forgot what it was. Dagnabbit. Oh, handouts. All right, so somebody asked, how do you get the handouts? Right before where you typed your question where you typed your question, look right above it. There's something that says handouts. All right, that was for Lewis. No, that wasn't for Lewis. Who's that for? That was for Robert. So look right above where you typed your question. Right above it, there's a little gray line that says handouts, and it should say 4 or 5. Hit that little arrow. It'll open up what PDFs are in there for you. Bring pictures of your wedding to Dallas. Oh, heck no. Oh, maybe. They're on my phone. I might. I'll do that. They're labeled different, but they show the same thing when viewed on the one sent out to me. Andrew, I'll look into that. But I'm looking at here. They are separate. I'll find out what's going on with my marketing department. All right. So I'm a tad bit over, but I wanted to bring those last 2 things into you for those people who stayed. Getting all of the other navigational series all the way through. And this is where you get your detailed PDFs. Click right there. Here's your timestamps. I do a timestamp of all of the sessions. All right. Thank you guys for being here. And I will see those of you who are going to be in Dallas. I'll see you there. And for not, I'll be gone for the rest of the week, and I'll see you next week. Have a great day, everybody, and I'll get this recording out to you as quickly as I possibly can. Have a great day. Adios. Arrivederci. Ciao.